Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. More records were set in New York. He tells us what the major drivers were. Publisher of the VRTrader.com letter, Mark Leibovit, checks in from Arizona. He tells us the world of cryptocurrencies is just starting to get exciting. And Tesla has soared despite all the naysayers. Mark also has a special offer for our listeners. Ed Steer from EdSteerGoldandSilver.com gives us the latest on the precious metals market and what, if anything, can be done about the manipulation of gold and silver prices. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Always a pleasure, Jim.
This is a recording. New record highs were set in the market again.
I'll tell you, and you know, last week it was Toronto that was leading the parade, and this week Toronto decided to lead for a while, but then have a bit of a pause. And, the government of Canada, or I guess the Bank of Canada, says, we might just do something with interest rates a little sooner than we thought. So, they're talking maybe next spring or summer, but in reality, it's the markets that create the interest rates, not the government. And it was only a matter of time before economies around here were going to pick up enough that interest rates could start back up again. Anyway, it created a hiccup in a little pop in the Canadian dollar for a day or so, but the week ended up pretty much unchanged for Canada. Just a choppy week overall. South of the 49th, the U.S. dollar bouncing really nicely this week. It settled down from the index high around 94.5 to 94.60 during the summer. Had a small correction and is now come back to life here. So we're nice 94 and a quarter, and if we can get through 94 and a half, that U.S. dollar index could really gain some upside momentum.
What's going on with precious metals?
Well, that's part of the equation. We've had a nice little rally as far as gold and silver was concerned. They haven't matched the movement that was happening in commodities in general, and we talked about the divergence in the CRB index moving to new highs while gold and silver were having difficulty. And now, with the U.S. dollar starting to turn up here in the last year or so, that's putting some additional pressure as far as the gold and silver markets are concerned. And this, we're coming into a window, historically, November to December provides usually some pretty good buying opportunities as far as the gold and precious metal stocks are concerned. So between here and the end of the year, we've got some parameters that we will be looking at for potential buys, because in particular in the year following a U.S. presidential election, where we are right now, the last 50 years, 12 instances where you have that post-presidential period, and of those, 11 of them went on in Q1 of the following year, that will be next year, to make new multi-month highs. So whatever kind of a correction we can find a low on during this next 2 months could be pretty attractive. So we're putting that one high on the list, and the homework has been done, so that we'll just be looking for some of our signals to kick in.
The energy sector, crude and natural gas, what's going on there?
Natural gas peaked out, about a month and a half ago. Good correction down to the moving averages and back to retest the high. So you got a bit of a double top up here right now. Normally, November is going to be a seasonal high. Occasionally, it'll push through into January, February, but it really takes a cold spell usually to make that happen. So at this point, start to look for a bit of a chattery phase as far as that was concerned. Crude oil got up into good resistance levels in the last week and a half, and then corrected back to its 20-day moving average. And I think at this point, you want to make sure that it holds around the $81 level. That for us would be where the 20-day moving average is, and just to hopefully see that hold in place and look for some higher numbers. Commodities in general, though, we look at it. The CRB index has got some pretty good overbought readings. When we take a look at not just the daily trends here, but on a weekly and monthly basis, the relative strength indices that we look at in our own exhaustion index, we've got signals here that you don't see very often. The monthly signal has come into place as of this Friday, as far as CRB is concerned. I haven't had one of those since back in 2006. They aren't that frequent, and you generally get a pretty significant correction. The only time we haven't was back in the big inflation days of second half of 72, 1973, and that was just a huge move as far as commodities were concerned. But other than that, the type of overbought signals we've got right now have seen the market roll over and have pretty decent correction. So, that's another reason that we're a little antsy here in terms of gold and silver right now, thinking that they can correct back down, and that would be part and parcel of the correction in the CRB.
Bitcoin, what's happening with that little buddy?
Well, flirting with that $64,000 level on gain. So we got now, when we look at a big cup and handle pattern over the last year and a half. And it's from the test of the highs, the small correction that we had into the high 50s creates the handle out of that cup and handle pattern. And starting to push through 64 would be pretty exciting on the upside. And, who knows? You measure the depth of the overall pattern in this last year, you could easily be looking at numbers over 100,000, which is what we looked at before. We got a little antsy about the market when it corrected a month and a half ago, but that turned into a pretty good low, and we'll see what it does on the upside. So, if gold and silver are a little sloppy in here, you could see Bitcoin still gain some momentum.
Ross, thank you so much for chatting with us.
Always good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on Twitter at ChartsByRoss. Coming up, Mark Leibovit next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to This Week in Money, Mark.
My pleasure being back. I hear you just came out of a couple of weeks of rain.
Oh, yeah, rain coming sideways. We had a record low cyclone just off the Pacific coast from California to Alaska. Nothing but rain. But sun came out today during the time of our interview, so all the leaves are gone. The streets have been swept clean. It's beautiful.
Well, that's good because we have a solar flare situation developing on our celestial neighbor, and it was a blast. They call it a blast, at least on the spaceweather.com. It's supposed to arrive, according to satellites that track this stuff. Apparently, it's going to hit the 30th to 31st, so perfect for Halloween. So if you have some clear skies, you might see some nice, nice auroras up there.
Yeah, just in time for the kids to go out there and trick and treat.
Right.
Now, Mark, for our listeners, is there a special offer this time?
Yeah, sure. Let's use the 2020 half off. And our prices are going up January 1st, just letting you know. But for now, it's 2020 half off for any of the subscriptions for any time frame you select. So if you're thinking of doing it, I would do it soon. And we also have a new newsletter, which we hope to have ready here in the next 30 days. Our year-end special opportunity letter, which basically plays the January effect, both stocks that have been sold off and depressed, having a little bounce into January, and sometimes you get some huge percentage gains on a 30-day or so trade. So we're really looking forward to it. We had some real big winners last year. So it's once a year, one-time letter, special opportunity for little year-end plays, and that's coming hopefully by the end of November.
The cryptocurrency front in the news, what do you see happening with Bitcoin and all the other coins, some 7,000 of them?
Well, not all of them are going to do as well as each other. I mean, that's pretty much, clear. I mean, some don't go up, some are not promoted as others are promoted. The Dogecoin, affectionately known as the doggy coin, that Elon Musk had talked about on that Saturday Night Live broadcast this past summer, for example, shot up. It really hasn't started to move again, though there are many out there that believe that it will. Then we've had, other things that have come out of that. It's really funny. I mean, it really is entertaining. I mean, I'm really enjoying this because having cartoons and comedy along with the stock market, sort of makes your day, particularly when you see the Shiba Inu dog, which is a Japanese dog, as you know, which has been, character of it on the, Dogecoin, again, the doggy coin. Some people call it the doggy coin. And out of that has come Shiba Inu, a coin by the name of the dog itself. And this thing has exploded. It's just incredible. I can't give you the exact percentages. It's got to be 1,000, 2,000%. I mean, I just have a relative, for example, that bought, a few $100s of the damn thing and made $20,000 or $30,000 on it in terms of the percentage gains. And I'm not saying that's going to continue. And then you have even outtakes of that one. Apparently there's another dog, the doggy girlfriend dog. So it's a Doge, which Elon Musk has been talking about. And there's a new one out now. It's hard. Some of these are hard to get. You have to get to the right platforms to get it. I'm not the leading world expert on any one of these coins, but I am tracking what's going on because it is a market. You can chart them and see the activity. But anyway, you got the Doge GS, which is the girlfriend dog. It's a little cute picture of the doggy girlfriend. So you got, essentially I'm just described 3 different doggy coins, doggy-related coins, and these things are making some people a lot of money. The big names like Ethereum that's the biggest outside of Bitcoin itself, went to a new all-time high today, and it's around $4,400, I think, a coin. And looks like it's headed to about $7,500 a coin because I chart the ETF that tracks the Ethereum, and that looks to me like it's going much higher. It could be, I hate to use the word short squeeze, but, it looks like that kind of thing could be coming where this thing just, just parabolically explodes, in a straight up type move and some type of big, blow off of some kind. Could happen here in the next, 30 to 90 days, I suppose, the way the charts are setting up. Bitcoin itself got into new highs, so it looks like to me it could hit 100,000. Maybe some people say Max Kaiser, I don't know if you know that name, out in Europe. He was on Russian TV 7-8 years ago talking about how Bitcoin would go to 100,000 when it was $50. So, some people have been predicting $500,000, $1 million on the Bitcoin. I don't know if that's going to happen, but we're watching the charts, and certainly we have ETFs that we could trade. So the big action that everybody's talking about, I'm talking about in the trading community, and I'm not just talking about kids. And the kids, of course, with Robinhood and with the crypto platforms are sort of controlling the markets now on a certain level because everybody's catering to them, and there's so much internet chatter, and there's so much money moving around, and it doesn't take a lot of money to move some of these small coins around. So all the chatter and activity has been in the crypto space. So for those of you out there who've been laughing about crypto or ignoring it, you are very foolish because there's a lot more coming. I don't think crypto is going away. I've said this so many times in the last 3 or 4 years. We have one of our letters that we produce is called the blockchain letter. We didn't call it crypto. We should have, but it's called the blockchain letter, and it covers, a few of the highlighted coins and tokens. And, in fact, I'm supposed to be moderating a panel at the World Outlook Conference in February on crypto, and I'll be doing another interview on another program about it in the next couple of weeks. But, I'm learning like everybody else because I'm not a blockchain programmer, but I am a chartist, and you can see what's happening, and you can see momentum when it's in a situation. I mean, people were laughing at me in 2014 when I said marijuana was a play. I mean, actually, I was in front of an audience. I've said this before, 1,200 people, and they broke out laughing when I said, where was the next big investment opportunity? And what was happening? Same thing is happening in the cryptos. All this activity and volume coming into the situation. And, it's a funny thing about momentum and emotions, how they can move you in a direction much higher and greater than you would ever imagine. I mean, look at Canopy Growth, which was the leading cannabis name in Canada, essentially went from $1 to $56. So, I mean, that told you, there were some nice gains there, 50 times on your money if you got in early. So, this is it. This is what's going on, Jim. So just a highlight of the activity this past week, and I would say you want to stick with the cryptos. You're going to have to go to our blockchain letter, and, we have some names there. The big name Bitcoin, I guess, is your safe bet because, or Ethereum, because these are the blue chip names out there. And I'm not sitting here worried that the government is going to stop or prevent us from buying and selling these things. I think Bitcoin is more powerful than the government. I think people want their money away from the government. That's why cryptos have exploded. We don't trust the government. Currencies keep going down in value. The government is irresponsible in the way it manages our money or taxes us. So, the future is away from the conventional system, and that's really how all these coins and, vehicles have come into being because we don't trust government, we don't trust currency. We're looking for another way to barter, trade, and secure our future. So a lot more interesting things coming.
China banned the trading of Bitcoin, but I hear they're rethinking it because that means they're leaving a lot of money on the table, especially, say, if they tax those transactions.
Correct. And plus, when they banned it, those that are mining the Bitcoin, which involves a lot of computer power, technology, I'm not into it. I mean, I've seen pictures of, looks like a warehouse full of computers that are just running 24/7 to try to mine, they call it mining, the coin so they can pull it out of the system. A lot of these operations moved out of China because my money's going to drive people to go where they can go. Obviously, they're not going to put a simple thing like a government to stop them. I mean, governments are trying to stop people for generations, and money moves where it feels safest and where it can grow. Yeah, so China is not going to stop anything. U.S. government's not going to stop anything, and I remember there was people were laughing. I think it was 2 or 3 years ago. I think it was 2017, if I'm not mistaken. It was 2018. Some funds, hedge funds, and other investment advisors were suggesting at the time maybe you should put a small allocation into cryptos. Like 5% of your portfolio, like you used to recommend for gold or silver. Diversify. And people were laughing how ridiculous and speculative that comment was, and how irresponsible that was. So right away you knew that it was the right thing to do when you got the negative reactions. It's like, when you hear negative stuff, you want to fade it. You want to go the other way because generally you're getting misinformation. And I see this all the time with analysts who don't like something, but the charts are telling you something else. So, why would Wall Street want people into cryptos? They want you buying stocks. They want you to they want to manage your money in the stock market, just like Wall Street doesn't like people in the gold market. People buy gold, they're not in the stock market. They can't manage their money unless they buy them an ETF in gold. So gold has been downplayed by Wall Street forever. And the only reason cannabis took off was because they can make money in cannabis stocks. But crypto, is not part of your, listed stock situation, except for a couple ETFs, which are now coming on board, by the way. So that's how Wall Street wants to participate, by creating the ETFs. But, it's not their first choice. They'd rather go buy Microsoft or, Apple Computer or something like that.
Tesla in the news. They're the first junk-rated bond company to top $1 trillion in capital value. What's your feeling on Tesla?
Loved it. Still love it. We had put a chart in our newsletter. It took Tesla 18 years to reach 1 trillion market cap, which is what it just did. It took Google 21 years to do that. It took Amazon 24 years to do that. It took Apple Computer 42 years to do that, and Microsoft 44 years. So Tesla has reached the 1 trillion market cap ahead of all these other big name companies. And it's over $1,000 a share. I remember, a couple of years ago at the World Outlook Conference in Vancouver, I think it was, this is before the split, I think it was $600, and I predicted it was going to go between $2,000 and $3,000, which it did. And then, of course, it had its split. Then it was trading around 1,000, dropped to about 500. Now it's back to 1,000. I've been predicting when it was down 600, up to at least 1,200 or higher. Now it's already up to 1,000, moving toward 1,100. And I might have to recalculate. I mean, Elon Musk, there's no other way to say it. He's the Edison of our time. And you can criticize him all you want, but he is the most brilliant, successful promoter and strategist and implementer of technology that I think the world has ever seen, besides Edison or people like that, or Nikola Tesla himself, who obviously came up with a better form of the electricity. Nikola came up with the direct current, and Edison had Edison had the direct current, and Tesla had the alternating current, which is what we all use now. But starting with PayPal, moving on to Tesla, SpaceX. He's got the Boring Company, which drills underground and stuff. Who knows what else he's going to come up with? These may be all part of the Tesla stock. I mean, maybe looking at a stock at 1,000, which might be a $10,000 stock in the next few years, 10 times where you are now. I mean, or more. Who knows what he's going to come up with? Tremendous innovator. So, you're talking probably, one of the Super Bowls with regard to Tesla. And remember how many people were criticizing him? Oh, the company is a fake company. He's using government loans and tax incentives to build a vehicle. Meanwhile, he's built one hell of a vehicle, which is still the best. And he's an innovator. And now he's got the Teslas that are driving, these self-driving ones. And apparently that's going to really launch the company into much higher levels. So don't sell your Tesla. And if you don't own any, buy some. That's my answer.
The crude oil companies have announced super high profits in the third quarter. I believe Chevron plans to buy back $10 billion worth of shares over the next 2 years. At the same time, the International Energy Agency is telling us not enough money is being put aside to invest in oil and gas exploration in the future. Why can't the oil companies just keep the cash they have right now on hand to do that exploration? Or are they looking forward to charging $100 or $200 a barrel?
It's called financial engineering. And what it is, it has been for Wall Street for years, is, you company executives, along with shareholder pressure, want to see their stock prices higher. So if your company's got a lot of cash, they want to make money on their stock, they just do this financial engineering scheme of buying their own shares and taking shares off the market that would normally be trading. So what does that do is it has fewer shares out there, so your earnings per share is greater because less shares are in the marketplace because they bought up a bunch of them. They stick it in the company treasury, and then the stock goes higher. So they can unload their exercise their stock options. Shareholders are happy when it goes up. And this has been a big criticism of mine for a long time. I mean, instead of companies putting money into their company and expanding, products and services and equipment and, perhaps payroll and everything else, they buy stock instead with their extra cash to drive the stock up. So this is just capitalism at its worst, I guess. I mean, it's good if you're making the money, but it really is not helping the companies or the future of the companies where they theoretically could improve themselves or expand versus just worrying about the price of their stock. Unfortunately, the people that run the companies are hired and fired based on how well the stock does, and that's really the big problem. If the stock's not doing well, and you're the CEO of the company, they fire you and they hire a CEO that'll drive the stock up. So, and then that usually involves this financial engineering. But as far as the oil question you brought up, I mean, that's a whole other can of worms, because there's all this green energy nonsense out there scaring people that, we have to absolutely not have any fossil-based fuels in existence in the future because that's bad for the planet and everybody else. So, companies are afraid to invest or explore, and they're afraid of why should we invest in finding more oil or gas or whatever, if the legislation is going to be against us and we can't sell it. So that drives, prices up because there's less supply around. So, I've mentioned this in previous interviews. I mean, there's no limit to how high oil, natural gas, or any of the fossil, resources can go if the environmentalists, put barriers in the way of you finding it or drilling it or exploring for it. So, crude oil could be $400 a barrel in 5 or 10 years. I mean, who knows where all this could go if they restrict the supply, and there's still demand for it. There's still plenty of vehicles that are going to need it. And, I don't see any airplanes flying on solar power yet. I mean, I guess they could put a nuclear plant, a mini nuclear plant inside of every airplane, so they run on nuclear energy the way some of the battleships and submarines do. I guess that could happen at some point, or maybe they could put that in individual cars, so you wouldn't need even electricity to plug your car into. But there's going to be a demand for energy. We've seen coal prices go up and coal stocks rallying. It's really funny. I mean, I enjoy this because I don't believe in the global environmental movement the way everybody else does. I think it's a manipulation myself. It's just a way to make money. Not that I don't care about clean air. I mean, everybody wants clean air and water, but this is not what it's really about. It's for control and power and influence and everything else. So, but in the meantime, we're going to see higher prices in the energy sphere, and I don't know if we're going to be able to get rid of the crude oil the way everybody insists is the case. And there are ways of ameliorating the effects of that. There are scrubbers and things that keep the air clean around plants that generate, negative emissions. It's not like we, can't help control these things. I mean, it's really short-sighted on their part. Plus, if you want to build all these electric vehicles and wind turbines and electric vehicle components, you're going to need oil, because oil is part of many of the materials that go into these various energy creating devices. So it's going to be real interesting how it unfolds, unless everything stops. An asteroid comes, Jim, or maybe the solar flare, which is now heading our way, supposed to hit around Halloween, is bigger and stronger, and it shuts the planet down. I mean, if something like that happens, then this whole discussion is moot.
Well, try getting your cryptocurrency when your computer crashes.
Right, you won't be able to trade stocks or the computer or the cryptocurrencies or anything. We'll be back to barter again, So, you can't discount that happening in the future. I mean, we had the Carrington event back in the 19th century. Something from outer space changes our world overnight. We can have a little shift on the little axis on the planet, little things like that. A little more volcanic and earthquake activity. suddenly the sun is blocked and the planet cools down, and suddenly crops are not as readily available, and there's starvation, and all kinds of wars and disruptions come up because of something in the geocosmic sphere, not in the financial engineering sphere. So, got to keep your eyes and ears open. It's happened before on this planet. Apparently, from the study of ancient archaeology, many times where civilizations were wiped out unexpectedly, whether it was a planetary shift, whether it was an asteroid, whether it was a solar flare, earthquake, something happened. It's going to happen sometime to us, and whether we see it in our lifetime or, our kids' lifetime, these things we have no control over. So it's all coming. You just got to enjoy each day and hope for the best.
Well, I mean, archaeologists have found ancient cities that were abandoned because they were hit by 100 years drought.
Right. Happened here in Arizona, where I live. There's all these, they call them the Native Americans, where they had to suddenly migrate. It was about like 1,000 years ago. Suddenly the climate suddenly changed, the weather patterns, they couldn't grow crops. I think it was around 1,000 or 1,100 AD, just here in northern Arizona, for example. It was supposed to be, more tropical. There's a spot north of where I live. It's between Sedona and Flagstaff. I used to live in Sedona for many years. It's called Oak Creek Canyon, and apparently, I can't find it offhand, but apparently people who had visited Oak Creek Canyon a century or two ago drew pictures of parrots that apparently were flying around in Oak Creek Canyon. Now, if you go up there now, it's nowhere like that. It's not desert. It's still lush and greener than the rest of Arizona because you have a creek running through it. But for parrots to be there, you would assume it's much more tropical than it is now, and it could have been a couple hundred years ago. So things can change more dramatically, I think, than people realize, and whether it was a shift in the axis of the Earth there or just was, having to do with some other planetary event that caused that. There was a lot of volcanic activity, and there was in northern Arizona. There's a lot of cones up there. People don't know that Flagstaff, for example, that has a peak of 12,000 feet, Mount Humphrey. Well, that's an extinct volcano that apparently blew its top, I think it was like 10,000 years ago or something like that. And, sometimes these volcanoes that you think are dead, start to come back. So, there's a lot of dead volcanoes, I should say, around northern Arizona. How do you know these things aren't going to start suddenly come back to life in the next 100 years? So things could change. Very interesting stuff. But thank you for mentioning that. That's an interesting insight.
Mark, thank you so much for being on This Week in Money.
Having a great time doing it. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. Coming up, Ed Steer, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ed Steer, founder of EdSteerGoldandSilver.com. He's also director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Merritt, British Columbia. Welcome back to This Week in Money.
Well, good afternoon to you, Jim, and to all your listeners.
What's the latest on the commitment of traders' reports on gold and silver?
Okay, well, it just came out about an hour ago, and I just got off the phone talking to silver analyst Ted Butler, who's the real authority on all of this. And what we saw this week was not happy news in one respect, and is that the commercial net short position in both silver and gold increased by huge amounts, which is not what we wanted to see. And before people get upset about that, I will point out that the big four and the big eight traders, the commercial banks and investment houses that are short the market, they did barely anything this week. So it wasn't them going short this week. They've been very reluctant in the last couple of months or so to go short at all. And it was the smaller traders, the 30 or 40 traders beneath them that did all the selling this week. So although the headline number was negative, if you looked under the hood, it was a very positive report in respect that the Big Four and Big Eight did not go further short. So all in all, I was happy with it, regardless of how bad it looked on the top.
How are gold and silver looking?
Well, they're looking awful. I mean, gee whiz, everybody and his dog knows that the price of gold and silver and the other precious metals should be at the moon already. And as I keep pointing out this week, and the last time I was on and the time before that, as Ted says, the price is set in the COMEX futures market by these 4 and 8 large traders. And until that changes, nothing changes. But, gold should be many multiples of what it is now. And, of course, silver should be somewhere north of $100 an ounce at this moment, but they're not. So one of these days they're going to have to let the price go. But right now, things are kind of in the dumps. But the physical market is tight, and I know you're going to get into that in a minute.
Where are we in the seasonality for gold and silver?
Seasonality only really, there is seasonality of the market, but it's hard to find it now because the price is being so managed. In the Far East, of course, it's determined in India by their wedding season, which is now upon us. And of course, we've got Christmas coming up, and China, both India and China have been huge importers of gold so far this year, and it's really picked up in the last 2 or 3 months. So, last year the imports into those countries because of COVID and all the other problems they were having was very low, but this year it's jumped up a huge amount. So there is seasonality, but it's been overridden by this COVID thingy. And this year it's sort of gone out the window because as the World Gold Council reported yesterday, the demand for gold across the board is through the roof. So you can throw seasonality out the window this year.
Why do you think the demand for gold is through the roof?
Well, like I said, India didn't buy very much last year, and now that this COVID thingy is mostly in the rearview mirror over there, and it was same in China, they weren't buying much gold, so they weren't importing much gold, but things have changed enormously, and that applies not just to India and China, but to Germany and England and every other country. I mean, you go to any of the precious metals websites that are worth anything, and they don't really have much selection, and everything's back ordered. So, the demand is there in gold, but it's even more monstrous in silver.
Do you think it's because people feel the stock markets are about to take a tumble?
Well, I suppose it's that. It could be part of that. It could be the dollar. Who the heck knows? But one thing is universally known out there, and that's because of this Wall Street Reddit crowd that's come along out of nowhere when they showed up in late January, is that everybody and his dog out there knows that the price of silver and gold are undervalued, especially silver. And now there's a groundswell of support for buying this stuff coming from every possible direction you can imagine in every country in the world. And people are just scarfing this stuff up left, right, and center. And it's a groundswell that's just not going to go away. And sooner or later it's going to have an effect on the price. But no, the demand out there is just absolutely through the roof in everything in every country.
Is part of the demand for silver the push towards greener energy, solar panels, and so on?
Well, that canard comes up every once in a while. There's no question about it. It's, industrial demand for silver is through the roof. I mean, look at the electric cars that are coming out now, and you've got solar panels, and you've got every piece of electronic and mechanical equipment out there uses some silver in one form or another. And if we're going to go this green energy route, it's going to demand even more and more silver than we have today. So that's part of it, but where the demand on the margin is coming from right now is from the retail investor demand, because it's in very, very short supply. But it all adds up, and sooner or later, it's going to show up in the price. Right now, there's a big shortage of silver in the market.
How do gold and silver usually act during times of inflation? Well,
they're supposed to be rising, and if the the big four commercial traders, the banks, investment houses, they've been sitting on the precious metal prices since Nixon took us off the gold standard, 50 years ago? So they've been sitting on the prices for over 40 years. And, 40 years ago, the price of everything was a lot cheaper than it is today. And if gold and precious metals were allowed to rise the way gold would certainly be banging on the door of 10,000 an ounce, and silver will be well north of 100. And they've been sitting on the price because they don't want people to see just how badly they've been debasing the currency all these years. And as you know, just in the last couple of years, it's really taken flight. And despite that fact, they're still sitting on the prices of gold and silver, and they're not being allowed to reflect inflation, the inflationary pressures that are in the market right now, and just to keep people in the stock market, the bond market, everything paper. They want to keep everybody on the paper side of the street rather than the physical side of the street. But that's starting to evaporate around them now because of the relentless retail demand and commercial demand for the precious metals and all metals of all kinds right now. So their chances of keeping the lid on this as inflation rises further is somewhere between slim and none, and we're going to see that reflected in precious metals at some point.
If gold and silver are manipulated, controlled markets, do you think the manipulators will let gold and or silver go for a run at some point?
Well, they're going to have to. I mean, like I said, this price management scheme in the precious metals has been going on now for at least 40-odd years. And now that the Federal Reserve has declared that inflation is going to run hot for a while, and it's no secret anymore. I mean, you just have to go to the supermarket and see what you pay for goods and services these days, and know that inflation is running hot. And at some point, these large traders, they're mostly commercial banks. Let's see, who would they be? HSBC, Citigroup, Bank America, Barclays, and I know I'm missing a couple. I think it's at HSBC already. These are the 4 or 5 major banks that are sitting on the prices of precious metals right now. And sooner or later, they're either going to give up price control willingly, they're either going to be overrun, or they're going to be told to step aside and let silver and gold prices rise, because the central banks of the world desperately want inflation so they can inflate their debts away. And higher gold-silver prices would do that immediately, of course. And at some point, like I said, it's going to happen either by design or by circumstance.
Overall, are you bullish on gold and silver stocks this fall and winter?
Yeah, well, I'll tell you what, you ask me that question every time I come on the show.
Yeah.
And of course I'm bullish on them. Everybody's bullish on the gold and silver stocks. And I'm all in. I've been all in for 10 years now, at least 10 years. And I'm just sitting here waiting for the day when this market hatches into something, and when the big 4 traders and big 8 traders decide or are told to step aside and let prices run. And there's no question about it. We're going to see much, much higher gold prices, and the stocks are going to do enormously well. We've seen in the small rallies that we've had this year and in last year that once gold and silver start to rise, people pile into the precious metal stocks pretty good. And there's going to be lots of 10-plus baggers out there for everybody to have. But the trick is to get in and be patient and sit there and hold.
How are the junior, mid-cap, and senior gold and silver stocks looking?
Well, right now they're certainly well off their highs of the year and last year. I mean, we're down, 20-30% in all the precious metal stocks right now, and basically they're in the bargain basement bin of your local supermarket, and they can be had for pennies on the dollar. These companies are selling for dirt cheap. And lots of them have enormous assets, and if anybody hasn't stepped into the precious metals market as of yet, this is the perfect time to do it. And if you're thinking of adding to some of your positions, you're not going to get much lower prices than you're seeing today. So yes, they suck, but if you're a buyer, this is time to buy them when they say the blood is running in the streets, and that's what it's doing right now.
What's happening in physical versus paper gold and silver?
Well, basically, I've already answered that question. The prices the current prices of silver and gold, especially silver, do not reflect under any circumstance the enormous demand there is on an industrial level and on a investment level for silver. It's just the market has basically been stripped bare of any available silver metal in size, and it's hand to mouth out there. And the paper market controls the price, but the physical market in silver and gold, like I said earlier in the show, is on fire out there. Whether it be jewelry demand or coin demand or bar demand, it doesn't make any difference what it is. Even industrial demand for gold is up, if you can believe that. So, the demand out there is absolutely enormous. It's just not being allowed to show up in the price at the moment.
Are gold and silver coins selling for higher than usual premiums?
Yeah, there's some of them have come down, but in the last 2 or 3 weeks, I've heard reports that they're back up again. I've been on several of the major websites here in Canada, one in BC, another one in Kitco, and then the bullion store I used to work in Edmonton, MRCS Canada. There's no question that the premiums are up and the demand is high, and sales are much, much stronger this year than they were even last year. And if you go on the websites of Kitco and some of these places, they've got stuff on back order 2 weeks, 3 weeks, a month, whatever, and they only have a fraction of their normal inventory that they have. If they have 50 items to sell, they may have 12 of them in stock, and the rest of them are all on back order. So you can see the demand is there. It is absolutely relentless demand. The problem, of course, is getting the product out of the refiners to meet that demand. No, the demand is just through the roof.
How is the gold-silver ratio looking?
Well, as Keith Neumeyer, who likes to quote this every time he gets on the air, and rightfully so, is that silver comes out of and gold come out of the ground at a ratio of about 8 ounces to 1 ounce. So for every ounce of gold that's mined, there's 8 ounces of silver mined at the same time. Right now, the silver-gold ratio stands at about 75 to 1. So at 8 into 75 is about 9 times. So just based on the ratio itself, silver should be 9 times the price it is today. I don't think it'll ever get there, but it might get to 8 times or 7 times. So, silver is the bargain of the century, and the ratio does not in any way, shape, or form reflect the demand out there for the precious metals, because any of the dealers I've spoken to will tell you right up front that they're selling like 30, 40, 50, 60 ounces of silver for every ounce of gold, and the sales from the Perth Mint and the sales from the Royal Canadian Mint and the U.S. Mints indicates that silver is outstripping gold sales by many orders of magnitude, 30, 40, 50 to 1. And so that means that, silver should be priced far, far higher than it is today. And north of $100 is where it should be right now.
Ed, what's the latest with GATA, the Gold Antitrust Action Committee? And before you even answer that, for people who don't know, what is the Gold Antitrust Action Committee?
Well, it was an organization formed in, I think it was 1999 by Bill Murphy and Chris Powell to get to the bottom of the price management scheme. At the time, they thought it was just a few banks in this thing to make a lot of money by scamming the market. And it was 2 or 3 years after that they came to realize that, they were up against all the money and all the power in the world, and it was it was J.P. Morgan and Goldman Sachs and all the American bullion banks, plus the HSBC in Britain, that were basically controlling this to keep the monetary metals suppressed, so that the paper markets would run wild. And the further they got into this, the more they realized just what they were up against. Because the gold price suppression scheme has been going on for 100 years. Nobody knows what the true free market price of any of these precious metals are, because they've never been allowed to trade freely in their entire history. It's always been a government-mandated price that they've been selling for, and now they've been suppressed. So it's taken 5, 10, 15 years for this to become widely known. And GATA's been at the pointy edge of this, but the person that was involved in this long before GATA got involved was silver analyst Ted Butler. I mean, he's been on the silver's case as a rigged market since, 1985 or 1986, or was it even earlier than that? So he's been doing this for like 35-plus years. And so, between GATA on one end and Ted on the other end, they've been, fighting this fight for, in some cases 35-plus years. In the case of GATA, it's been over 20. And now everybody and his dog out there knows the price is managed. And, only those people whose jobs and careers depend upon them not seeing what won't admit it to it. But as far as what GATA is up to today, I know that the New Orleans Investment Conference wrapped up. Was it last week or the week before? I can't remember. Bill and Chris were both at that conference and both gave keynote presentations at it. So, the story's out there. Everybody knows what's going on, and we're just sitting here waiting for this price management scheme to breathe its last. I know that's what I'm doing. I'm all in, just waiting for this thing to end so I can get on with my life, because I've been at this now for 20-plus years myself. So that's what GATA's up to.
Ed, with the industrial demand we see for silver, obviously, for solar panels and so on, shouldn't that really be driving the price higher now? It's just a commodity like any other if you step away from the investment and money scene. Why should it be any different than copper?
You're talking about silver. You're talking about a commodity that has a dual role in society. It's a key industrial commodity that's found in every commercial electronic product out there that I can dream of, or you can either, or anybody can think of. And it also has an investment side, so you really can't separate one from the other. But, the commercial demand, because it's the most, there's no question about it, and the retail demand is on the margins. Commercial, the combination of the two is what should be driving the price. But the whole situation is ass backwards. I mean, you've got the paper market controlling what the price of what the miners are getting and what the industrial users and us retailers, retail investors are paying. The whole thing is absolutely upside down in every precious metal. So the commercials, the total demand, regardless of where it's coming from, should be dictating the price. And it's not. And this has been going on, like I said, for the last 40 or 50 years. And this is what we're all waiting to end. And when it does end, it will end spectacularly.
Ed, what would happen if people went to their broker and said, see that paper silver I have? I want it. I want it delivered right now. What if everybody did that concertedly, just like the things we saw with the Robinhood Reddit crowd with AMC and GameStop?
Well, yeah, that would really be something. You would have to get all the long contract holders in the COMEX futures market to be prepared to stand for delivery. In other words, they take their warehouse receipt, or they take their long contract and contact the short and say, I want my metal. That would be the ideal world, and that would cause a short squeeze of biblical proportions. There's no question about it. But for reasons I'm not going to get into here, not all the long contract holders, especially those in the managed money category, have the ability to take the long side. As a matter of fact, their charter dictates that they can only trade the paper market. They could never stand for delivery. So that's not likely to happen, but it sure sounds good in principle.
Ed, are you ready to organize that?
No, I'll tell you what, I have my hands full with my daily column, which I publish 5 days a week, and I spend between 16 and 18 hours a day on that, and I've got no time for that.
Ed, where can people follow you?
If they're interested, I write a daily news letter on the precious metals. I've been doing it now for, 15 years, and I've been doing it for the last 6.5 on my own. Just, they can Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold and Silver. My website will pop up, and there's a tab there that shows you gives you a free sample of what my column looks like. And if that's the kind of information you're interested in, well, the freight is $100 US per year. And in Canadian funds right now, that's around 122 or 123.
Ed, thank you so much for being on This Week in Money.
Entirely my pleasure, Jim.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA. He was speaking to us from beautiful Merritt, British Columbia. Our conversation took place on Friday, October 29th. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Leibovit, and Ed Steer, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. Now stand by for a company showcase update from American Manganese President and CEO Larry Reaugh.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Jim, glad to be here.
Larry, you put out a news release this week. What can you tell us about it?
Well, the news release was a final submission of our report to the U.S. Defense Logistics Agency, or the DLA, on the Wenden stockpile material and our processing and everything. So now we're sitting waiting to hear back from. The interesting thing about the press release, that we actually have a quote from a member of Congress in there. Congressman Paul Gosar. He's a Republican in Arizona, and he's strongly behind and moving this process with American Manganese forward. And it's good to have friends, in high places when it comes to continuing our work. The DLA gave us a grant to do the first work. Now we'll be seeking a second grant to do the next step. So it's something that the U.S. needs, and it's something that they have to address pretty soon. Not only just the electrolytic manganese metal, but the manganese for steel. I mean, everything that's used in the steel industry, as far as manganese is concerned, is shipped in from offshore, and who knows when that gate will close. So, it's an exciting area to be in. This is how we started out with our recycling, was looking at the patents on the process to process low grades of manganese, and at prices that are similar, if not equal, to what China costs. And the only problem is that China controls about 97 or 98% of electrolytic manganese in the world, and they use a process that incorporates the use of selenium, which is banned in all the countries in the world, and yet everybody has to use that product because there's no place else to get it aside from South Africa, who charges a premium for their electrolytic manganese metal, and I don't think the premium is high enough. They should be getting more. And and they represent 2 or 3% of the world's supply of electrolytic manganese metal. So I think we're in the right hot spot there, and we want to continue the work with the DLA. The DLA, I do believe, will want to continue the work with us. If you read that paragraph that Congressman Paul Gosar put in, and he sees this as a big plus for the U.S. taxpayer, and so he's a very big fan of getting the U.S. independency from having to import manganese. So my favorite saying is, if you don't have manganese, you can't make steel, and if you can't make steel, the world stops. 90% of manganese is used in the steel industry, and
So you can see that potentially could be a very bad situation for the U.S. if those doors are to close. And they can go south for some manganese, but it doesn't mean that that's an easy entry either, because there's a lot of hostility between the South America and the U.S. So, and Canada also has no production of manganese. So it's a dicey position. It certainly is a position that we created for ourselves going back as far as 2007. And now we're going to reap the rewards of our hard work and our big expenditures. We were looking at bringing the Artillery Peak area into production, and the price of manganese fell out of bed. As I said, China controls the electrolytic manganese metal market, and they overproduced, and of course the prices had to go down. So a lot of companies basically shut down their production during up to 2016, 17, and dried up some of the supply, but it's still a lot there. It's obvious that that's going to remain the same because that's a big hold over the U.S. that China has. So I'd like people to think about that. And just moving on, an observation in the markets, we're seeing the commodity prices running up and running down. Copper and gold and nickel and zinc, and every one of them are just traveling up and down, up and down, up and down, and they're not really following the amount of stockpiles that are available. So there's no fundamentals in it, but that's why I stopped my newsletter some years ago, back in 2011, and because the fundamentals had completely deserted the commodity market. And it's very difficult now to forecast what's going to happen in the commodity market. Although I see a booming price in copper, I see a booming price in nickel, I see a booming price in gold and silver, and I think that these things are going to raise a lot of ships. So, and even some of the rowboats. So, I'm looking forward to the next year, and we gotta look at everything in the market. You can't just look at the pieces that you're involved with. You have to look at the overall market on almost a daily basis to see what's happening. And we certainly follow that. I used to follow it a lot more stringently than I do now. But I can see the abnormalities in the market, and certainly it must drive the CEOs crazy to see some commodity up 20 cents today and down 30 cents tomorrow. It affects the earnings, it affects the feasibility, it affects the project going forward. I mean, it's as simple as that. And so these are situations that we have to keep the eye on. We're looking at a metal now that has run up to $2,300 a ton, and we're checking our rare earth property to see if we have an abundant supply, and that could possibly be. So that's just one of the things we're looking at, and aside from our major effort on the recycling of lithium-ion batteries, and secondly, the manganese production of the Wenden stockpile. And that's a strategic stockpile in the U.S., and certainly working for the DLA, the old Department of Defense, is a big feather in our cap. So I wish everybody a great weekend, and I'm looking forward to resting up and moving on next week. And that's pretty much my podcast for today. So that's all I can talk about right now, Jim.
Larry, for people who aren't familiar with American Manganese, what does the company do?
American Manganese is a critical metals company, and it is certainly in the right area, and quite a few commodities out there. And certainly our recycling process, which is patented in the U.S., 2 patents, and now Japan and South Korea. So, and we've got 4 more applications outstanding, so that there is going to be a big boost. We get a lot of attention from the OEMs on our process. We do a lot of testing, which has cost us hundreds of thousands of dollars. And but if we want to sell our product, we have to do the testing, and we've announced the results, and they've always been stellar. So all we can do is move on. If you're looking for information on American Manganese, you can go to our website, AmericanManganeseInc.com. I know not enough people go there because I get questions every day on stuff that we just answered a week before. And, we try to keep a transparent site so that people can take their time and look through our site and do their due diligence and see the company is very transparent. The company is traded on the Toronto Venture Exchange under the symbol AMY. It's traded in the U.S. on the QB board under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. If you want to contact us, you can contact us at LREAUGH@AMYMN.com. Or you can phone at 778-574-4444.
Larry, thank you so much for the Halloween update.
You're welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. Our conversation took place on October 29th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.